What if I told you that Jerome Powell's words this Friday at Jackson Hole could shake the markets more than you expect? Today we are unpacking the hidden risks behind the headlines and what investors should be watching closely. Hey all, welcome to ShareTreck, where we bridge the gap between science and investments, and I'm your host Raj. Friends, you hear the unemployment rate is steady, maybe even low. But I think here's the catch. The US population, I believe, is shrinking slightly. Stricter immigration policies and fewer foreign visitors mean fewer people in the labor force overall. That can make unemployment look better than it really is because fewer people are even counted as job seekers. So, while the labor market numbers might seem strong, there's an important nuance investors need to consider here. Now, understanding this labor dynamic leads us to another factor clouding the economic picture: the GDP growth earlier this year and how the tariffs played a role. Remember, earlier this year, when the economy seemed to be growing nicely, a lot of that was, I think, thanks to companies importing goods in bulk before the tariffs kicked in. That pre-tariff inventory gave the economy a temporary boost, and now those inventories are running out, and the economy could actually be shrinking underneath the surface. With that in mind, it's also important to consider inflation trends, and here energy prices play a crucial role. Inflation looks tame right now, especially in the Consumer Price Index or CPI. But that's a big reason why energy prices have dropped sharply lately. Oil and gasoline are much cheaper than a year ago. That's holding the headline inflation down. But this calm could quickly change. Should geopolitical tensions spike oil prices again, inflation could jump rapidly, hitting consumers' wallets hard. And as we think about that risk, it's natural to ask, how reliable is the data Powell is relying on to make his decisions? One thing Jerome Powell worries about, and investors should too, is whether he's getting the full picture. The recent jobs data have seen some ugly revisions, and now the White House's new pick to oversee the BLS is raising eyebrows. This new commissioner has floated ideas like cutting back the frequency of job reports and openly criticized official data in the past. So, if the data becomes less trustworthy or politically influenced, Powell's challenge just got a lot more tougher, and the market volatility could increase significantly. Putting all of these pieces together, the labor market quirks, shrinking growth, inflation risk, and shaky data, it looks like we might be heading into a stagflation scenario. Stagflation is where growth stalls but inflation stays high, and historically, it's known to be a nightmare for policymakers and investors alike. Back in the 1970s, the Fed tried cutting rates to fight stagflation, but it only made things worse. The real cure was a period of high interest rates, unpopular but necessary to break inflation. Given today's political and market pressures, will Powell have the resolve for such a tough path? That is the question. So, what could Powell do when he speaks this Friday? Here are some possibilities. No rate cut and a firm stance. Powell holds steady, emphasizing data-driven patience. The market might sell off hard and the political attacks could ramp up. The other possibility is no rate cuts, but a softer, cautious tone. Powell signals he's open to cuts if needed, but is holding off for now. Accept some volatility, but maybe less panic, but political attacks will continue. The other option, a rate cut as insurance. Powell cuts rates to guard against downside risk, but tries not to signal recession. Markets might rally briefly, then sober up as the real risks sink in. Yet another option would be rate cut with a gloomy outlook. Powell cuts and warns of tougher times ahead. There could be a short bounce followed by a market decline amid mounting stagflation fears. So in this context, Powell's speech could set the tone for the rest of the year. But no matter what, remember this: we are navigating uncertain waters. Inflation growth, political risk, and data reliability all cloud the outlook. Markets could react sharply depending on Powell's words. Staying alert and prepared for turbulence is key. Well friends, thanks for watching this video so far. If you haven't subscribed, can you please subscribe so that it helps us build our investor community out here and for you to stay informed. That's all for this video. Until the next time, bye for now.